Hello and welcome to this show called Coffee and Crypto. I'm Arun Singh, this special show where you take a sip of crypto conversation. At the moment, the world is looking at Russia-Ukraine crisis. And as a crypto enthusiast, one thing that stood out for me was the cryptocurrency angle in the war. Yes. How is crypto playing a huge role in the crisis? That is what we'll explore in our explainer. So let's begin with looking at Ukraine and cryptocurrency. So just days ahead of the war breaking out, Ukraine legalized cryptocurrency. 272 of its 450 members in the parliament voted in favor of the legislation just a week before the invasion began. While the Ukraine government did not say whether the move was linked to any military conflict threat, tensions had been high at the Russia-Ukraine border for months. After the Russian attacks, the official Twitter handle of the Ukrainian government sought donations from everyone, including those outside the country. The tweet said, "Stand with people of Ukraine," now accepting cryptocurrency donations, Bitcoin, Ethereum, and USDT. The tweet also had two addresses of crypto wallets, one accepting Bitcoin only and the other receiving Ether and Tether. Now, guess who replied to this tweet? Polkadot founder Gavin Wood. He wrote, "If you post a dot address, I'll personally contribute $5 million. Well, he did. And then Ukraine's Vice Prime Minister and also Minister of Digital Transformation, Mikhailo Fedorov, thanked him with a tweet saying, "This will certainly contribute to the Ukrainian victory as well as support civil people. We will win, the best people with us." Now, according to Elliptic, which is a blockchain analytics company, the Ukrainian government and private aid groups have raised about $51 million. Hear that again, $51 million in crypto from more than 89,000 donations since the time invasion has started. And now let's end this segment with the latest, which is coming from Ukraine. That is, Ukraine is also accepting meme coins, that is Dogecoin. Fedorov said, "Now even meme can support our army and save lives from Russian invaders." So let me remind you, we're talking about cryptocurrency in the times of war. We've discussed Ukraine and cryptocurrency, and now let's talk about Russia and cryptocurrency. In January this year, Russia's central bank proposed a ban on cryptocurrencies on Russian territory, citing threats to financial stability, citizens' well-being, and its monetary policy sovereignty. But at the same time, the Russian government is developing its own central bank digital currency, which might be called digital ruble, that it hopes to use to trade directly with other countries which are willing to accept it without being dependent on the US dollar. Now, since the invasion, Russia has been hit with a number of economic sanctions. We've been hearing that in the news. And these sanctions are aimed at cutting the country off from the global financial system. We've seen how US has actually signed so many sanctions against Russia. Now, Ukraine fears that Russia will use crypto to evade these penalties. Now, Ukraine's Vice Prime Minister said, "I'm asking all major crypto exchanges to block addresses of Russian users. It's crucial to freeze not only the addresses linked to Russian and Belarusian politicians, but also to sabotage ordinary users." Now, here comes a twist. The boss of one of the world's biggest cryptocurrency exchanges, Binance, has ruled out restricting ordinary Russians from using the service. Its founder and chief executive, Changpeng Zhao, told BBC Radio 4's Today program that many normal Russians do not really agree with the war, so they kind of denied to do so, although Binance donated $10 million to Ukraine. So can Russia really evade sanctions using crypto is what we'll explore in our discussion with the guest. But just to wrap this explainer up, Russia-Ukraine war shines a spotlight on cryptocurrency for sure, but why has crypto come out as a strong tool in Ukraine-Russia war? There are three simple reasons. Number one, cryptocurrency can't be frozen. Number two, it cannot be censored. And number three, it can be used without ID. Now, we've explained all of this. We'll break it open to our guest who will be joining for a discussion with me. For that, we'll go to a separate setting. Now we have with us Malik Kotadia, co-founder and chairman of Innovation Labs. He's joining us, and then we have we'll shortly be having Ajit Tripathi as well, and then we have Preeti Khurana, director of advocacy and regulation Clear. A very warm welcome to both of you. Malik, my question to you: can Russia really evade sanctions using cryptocurrency?
Hi, Arun. Firstly, it's a pleasure to be back on your show, and as always, you picked a very topical theme. I think what you are asking is something which is amplified by this conflict, but it has been, discussed in the community for the longest possible time on the risks versus the opportunities of decentralized system. And always, I mean, this is a question of, can you really control a system which is by its very architecture decentralized? You spoke about, we've seen Russia has been removed from SWIFT, and there is this talk about, can it bypass these sanctions using crypto? Now, I'll give a couple of examples on both sides, and I don't think there is a very definitive answer. We have seen countries like North Korea doing this for a while. We saw this hack earlier this year or earlier last year, where a $400 million hack happened, and that was done through crypto. We've also seen, non-conflict zones, but countries like El Salvador or Venezuela, who've kind of not only legalized but wholeheartedly adopted crypto and Bitcoin for their own socio-political, economic reasons. This is not entirely unprecedented of going to crypto when you have a sanction, or when the mainstream or the Western financial system is not entirely in your favor. As far as can it bypass, I think I'll just give the analogy of a tunnel. When you have a tunnel, what happens inside a tunnel with the vehicles, you cannot really see, and you don't have visibility to that. So crypto can be seen in that sense. It is pseudonymous. I mean, it's not really anonymous. We all understand it, but we say it's pseudonymous, like a tunnel. So you may not really know what's happening inside the tunnel, but you can definitely track it in various ways by tracking what's going inside and what's coming out of the tunnel, what we call.
So in one word, can it evade sanctions using crypto or no?
No. My own view is it will be very limited because there are a lot of liquidity challenges, etc.
Okay, I have some other questions for other guests, but before that, very quick reactions from Ajit and Preeti. Preeti, with you first. Can Russia really evade sanctions? A quick answer.
Actually, that's a very interesting, view to understand whether Russia will be able to evade sanctions. As we have seen that this is a borderless currency, and there is speed, there is unhindered access.
Sure.
And in that sense, it may be very, very challenging for governments to prevent, this kind of thing from happening. So, the access may be far more easier, and in the days of digitization technology, it becomes easier for enterprises to start offering apps on or new ways of accessing cryptocurrencies can become very, very, very possible in this kind of scenario. So yeah, I mean, I would tend to think that it may be possible for Russia to continue to find a backdoor. I mean, essentially, a lot of countries, and like the other panelist was mentioning, they've used cryptocurrencies as like a backdoor currency. So it may be possible to an extent.
Okay. So first we had no as an answer, then we have an answer which is maybe. Ajit Tripathi is with us, advisor, Institutional Capital, Polygon. A very warm welcome. What is your quick opinion on this?
Yeah, so I think there are lots of myths, right? So first of all, Russia has not been sanctioned. So several individuals that are based in Russia, the Russian central bank, and certain Russian government agencies have been censored. So all of these have kind of known addresses associated with them, and when they appear on the OFAC sanctions list, then all of the centralized exchanges where most of the liquidity is already sanctioned and block these types of addresses. So any large scale transfers are not possible. So now if the government changes the rules, the US government or European government say, look, Coinbase or Binance, you need to actually block everything that's coming out of Russia, all the addresses associated with Russia, then they will follow the law. So all of these entities are obliged to follow the law. They're not obliged to, go above and beyond the law and block private Russian citizens. So one thing we should also realize is that Ukraine is one of the countries with the highest crypto adoption.
Yes.
So crypto is actually helping the citizens of Ukraine, deal with the tyranny of Russia right now.
Sure, but in the time of crisis, or let's say in the time of war, in this case, why are we seeing crypto come out as such a strong tool, Malik, in all of this?
Sorry.
So I think this, and this is an excellent question, Arun. This has been a debate for the longest time, or whether crypto is a hedge and a safe haven, or it's just another risk asset. And I think I personally believed, and I was researching this data for the longest time. I just give an example of a study done by a friend and colleague of mine, Mr. Ronit Ghosh, who's the global head of Citibank for research for banking and digital assets. Their study showed that, and I'm saying this is before the conflict, that there was a 91% correlation, or around that 90% correlation with M2 money supply. So essentially, it was following the same trajectory as other risk assets like stock exchanges or money supply, etc. So really, that entire argument that this is a hedge against inflation or this is a safe haven never really stood up for the last 10 or 12 years. But what we've seen in the last week is really something different. We've seen this spike not just in Bitcoin prices, but in Ether and also stable coins like Luna, etc. They are up 20 to 80%. So I think the jury is out. It's too early to say whether it's a safe haven and finally this establishes or not. History has not proven that so far, but we are seeing a divergence for the first time, and Bitcoin and cryptos are behaving more like gold than other risk assets.
Okay, seeing the rapid use of it, Preeti, since you specialize in regulation, are we looking at a global regulation after this entire chapter?
Yeah, absolutely. I think, this kind of scenario, governments may not have truly imagined, what could happen if there is some sort of a war or there is an economic collapse.
Okay.
And this, I believe, will, hasten the efforts by governments to introduce their own digital currency, working on their digital currencies and sort of even more deeply regulating what's happening in their own countries in terms of, how people have access, how, they are transacting, what are the implications, what are the penalties if you're in non-compliance. So I think in that sense, laws will be sort of made more stringent, and governments are going to wake up to this kind of a scenario pretty soon.
Okay, Ajit, quick word from you. I've run out of time for this segment, but what do you think? Are we looking at a global regulation after this?
Yeah, I think harmonization of rules, across the world is not a bad idea, because this is essentially Internet of Value, Internet of Money. So I think we need to create regulation that makes sense at the global level. And we've always been working towards that.
Okay. Well, thank you so very much, all of you, for joining us for this conversation. But now we're taking a short break. But there is a lucrative thing that we're going to explore, which is yield farming. If you're interested to know what it is, how does it work, all of that is coming after a very short break. Keep watching Coffee Crypto. Farming in real world can get you grains, but farming in virtual world can get you gains. Very bad joke. You're watching Coffee and Crypto, and of course we are trying to explore yield farming for you. First, we'll explain what exactly it is, because a lot of people are talking about it, and this comes under DeFi, which is decentralized finance. What is yield farming? In one line, it is one of the avenues of income for investors in the DeFi world. It is an investment strategy that involves lending or staking cryptocurrency coins or tokens to get rewards in the form of transaction fees or interest. It is somewhat similar to earning interest from a bank account. I mean, how you deposit your money and then they offer you interest on it. But now the difference is that yield farming can be riskier, volatile, and complicated as well. But if you're wondering how does it work, okay, we have answer to that as well. Users provide their cryptocurrencies for the functioning of the DeFi platform. Now, these users are called liquidity providers, or LPs. These LPs provide coins or tokens to a liquidity pool, which is a decentralized application based on smart contracts. dApps, you must have heard of that. The pool contains all the funds. Now, once the LPs lock tokens into a liquidity fund, they're awarded a fee or interest generated from the underlying DeFi platform the liquidity pool is on. But if you still have a query, we have one of your representatives. We have a Janta query for a segment which is called MCQ, My Crypto Query. Let's play that out for you.
Hello, my name is Amin Sama and I am from Bangalore. I wanted to know about yield farming in crypto, how we can leverage it for our crypto gains. Thank you.
That was short and sweet. How can we leverage it? We'll ask our experts. We'll begin with that question. Rohas Nagpal, who is Chief Blockchain Architect of Hi-Fi Blockchain. Srijan Bhardwaj, Serial Entrepreneur. We'll start with Rohas. How can we leverage yield farming is what this gentleman asked.
Sure. So I would say the simplest way to do it would be staking and lending. So many of the good crypto exchanges, once you create an account there, it's very easy to put your crypto on lending, and it's like an fixed deposit or an FD,
sure.
And you get a fixed rate of return. And secondly, all the proof of stake cryptos, if you hold them in your exchange wallet, you automatically start to get the yields, and the rates are given to you right on the beginning. So it's very easy to use.
Okay, Srijan, but how did yield farming become so popular?
So yield farming became popular in the DeFi summer, and what happened was that we got a couple of applications like Aave and Compound that came out, and users could put their money in and they could lend and borrow, and they could also stake their money. And when other people saw that at that point of time interest rates were huge and people got their stable coins deposited into these platforms and they started lending out money and they started borrowing out money. So that is how yield farming suddenly picked up.
Okay, and Rohas, now it gets really technical when this combination happened, which is cryptocurrency and finance. It's quite a complicated combination. So how are yield farming returns really calculated?
Sure. So like I said, when you are lending, the rate is known upfront to you. But when you are staking, an approximate annual yield can be shown to you because the price also keeps moving up and down. So in fact, sometimes it can happen while it is showing that you will get 50% annual return, the value of the crypto falls by more than 50%. So your interest is then not even enough to cover up your capital that you had invested. And
I know we've discussed this in past, but those who are new to the party, maybe if you can explain staking, because we'll be using this word again and again, what staking really means.
Sure. So when we saw Bitcoin, there is a concept called proof of work to validate transactions and build blocks. So for that, you need to invest in a lot of expensive hardware and electricity, and in return, you get rewards. Now, some of the new cryptos that came after Bitcoin, they said, let us use a better system, which is better for the environment also. And instead of creating a selling pressure, it creates a holding pressure. And that is where staking came in, where you lock your crypto for certain time. And because you have locked it, you are given the right to validate transactions and blocks, and then you are paid a reward for the validation. And if you try to mess with the system, your blocked crypto can be taken away from you.
Exactly. And as I mentioned in my explainer also, there are risks involved in this as well. Srijan, if you would like to point out few for our viewers.
Yeah, the biggest risk is that everything is being done through smart contracts. And we have seen earlier that smart contracts can get exploited and users' money can be stolen. Smart contracts can get hacked too. In fact, yield farming sees this every single month. The second is greed. A lot of these new projects, they came out with extremely high percentages and they offer even 1,000,000% APY, which is unsustainable. But a user does not identify these as risk because greed take over. So I would say these two are the biggest risks, smart contract and the greed. So whenever you see high APY, don't chase it because no one is going to pay you that money.
And I've heard like some crazy amount being offered as interest or as a reward. Is that a warning sign?
Yeah, usually it is because the basic game theory says who is going to be paying this money.
What is the craziest return you've heard about?
The craziest return I have heard and seen is $1 quadrillion.
Okay.
Percentage. Like I yesterday saw a pool giving out. Yeah, percentage. Yesterday saw a pool giving out 33% a day, which becomes $1 quadrillion APY.
Okay, and Rohas, would you like to point out few risks involved here?
Sure. So when we are lending, the biggest risk is the exchange defaulting. So suppose the crypto exchange defaults, unfortunately all your cryptos are locked in their wallet because that's what happens in centralized exchanges. And if they default, then all your money is completely gone. So that is one risk. And second is when it comes to the staking, The risk again is that, the platform you are staking through, they may actually take your money and disappear. So you got to be very careful, and you have to be tech savvy enough to understand how exactly these things are happening. And liquidity pools, I have seen a lot of people create them and end up losing huge money, because that is actually quite complicated, but people think it's very easy.
But how do you analyze this exchange or the offer which is up for grabs?
Sure. So when it comes to staking, try to go with cryptos which are well established in the market. Ideally, I would never look at a crypto which is below $1 billion in market capitalization.
Okay.
So try to look for the solid established projects. And when you see too high rate of return, please be very, very doubtful. I would say most of the times you can just make out based on this logic.
So be careful from too good to be true offers. Thank you so very much, both of you, for joining us for this conversation. With this, we've come to an end of this show. That's all the time we had for Coffee and Crypto. We'll be back next week. I'm Arun Singh. It's goodbye from my side.